We had a big rally going into the month of September in risk assets, equities, emerging markets, the foreign currencies. And then we've had profit taking in September. But today's the last day of the month. And so I think that as we were approaching this today, the end of the month, people began buying back some stocks. They stabilized. It looks to me like they try to push the euro through 116, and it snapped back. Sterling's not far from 130. The strongest currencies this week have been the Scandinavian currencies and the Aussie and Kiwi, the Australian dollar and the New Zealand dollar, which typically are the risk currencies among the majors. So I think that October is going to be a big month for taking more risk. Partly, I think, because of two things. One is optimism, not so much about the vaccine, but about the therapies, the treatments for it, which will reduce the duration and the severity. And what's happened is that the global economy has moved in sync, leaving aside China, which is it's a huge exception to the general rule that most economies contracted sharply in Q2, expanded sharply in Q3, and as we begin Q4, it looks like the economies are slowing down dramatically. So here's what we're looking at. For the Eurozone and the UK in Q4, something like 2.5% to 3.5%. For the US and Japan, something close. The polls suggest, these surveys suggest that people have largely made up their minds already. There's nearly a record low amount of people who say they are undecided. And there's a very low number of people that said they would be swayed by the debates. So I think that sort of the status quo, which is Biden is ahead in most of the key swing states. But what we do know from the debate as well is that President Trump, should he lose, that he will be challenging it in the judicial system. He'll want to do that. And so many people are concerned about the prolonged, we won't know the results for a long time. And maybe I say one other thing, and that is, that watching the debate last night, and I've seen many debates over my, as an adult watching these things, and I could appreciate from a foreign point of view, even from an American point of view, how uncomfortable parts of that debate were. And I think that what strikes me is sort of like what Bismarck had said about democracy. He said, in a democracy, one should not see the way laws or sausages are made. Because, it gets to just how messy it is. You think about sausage, all the things that we don't want to eat. We put them into some casing, and now we're going to eat it. And I think that the same thing with these debates. They look very messy, and I said to you before that it sort of hurt my ears and my eyes. But I think that this is sort of the messy, it's like, what's the alternative? This is a messy process, and I think that it's sort of like watching ants scurrying around some honey or something. It looks like they're very unorganized, but there's a deeper sense of organization that comes from it. And so I think that same thing with these debates, that it's very messy, doesn't look like it's impacted the markets, it doesn't look like it's going to impact the election, and it's just sort of one of these sort of unseemlier sides of this sort of democratic process that we like to process and the conclusions. Like in the stock market, September was a month of correction. The dollar had fallen for the last 5 months, and so it had a bounce in September. It does not mean that it's been a trend reversal. I mean, I think there's people like myself think that this was September was a counter trend move, and that is that it was a correction, and the underlying downtrend in the dollar will resume. And I'd put it sort of like this in a way, that given that the U.S. has a large trade deficit, a large current account deficit, and a large budget deficit, the U.S. needs to be able to offer a higher interest rate premium to attract foreign savers at these prices. And so because the growth is so weak, that is to say that because of the COVID shock, interest rates are too low to offer this premium. And so something has to bear the burden of the adjustment. And I think it's the dollar's exchange rate. So I look for the dollar to continue to weaken on a trend basis. Yeah, so I think that I think you're right that there's a few political events in Q4 that I think mean the risk of higher volatility, which is what as investors we don't like to see, that higher volatility. So I'd say the first big event is the middle of October. That is the EU summit, when they hope to have an agreement between the UK and the EU about their future trade relationship. And then, of course, we had that early November election. And as you rightly point out, it's entirely possible that we don't know the results, and that the results will end up not being clear until we have an adjudication process. That is, it goes to the courts. I think that's the risk. And so I think that, you know, when people golf, they say drive for show and putt for dough. And when it comes to the markets, I think that drive for show means we could talk about the big macro picture, but that's not the way investors really make money. What really happens is in the short term, that putting. And that means I think it means partly to look past the noise, to know that there could be some volatility around the election, but that as investors, we want to buy good value, stocks below what we think is value for them. And so I think it's just to keep in mind that there's going to be some volatility, and that volatility could present new opportunities to buy that stock that you've done your homework on at a cheaper price. So I think we should be prepared for volatility, but embrace it as an opportunity to buy stocks that we want, to make those investments, rather than try to chase the market or get worried about how it can knock us back in the short run.